Hello, it's Dylan Simon with the Simon Anderson team here in Seattle, and welcome to our June 2026 apartment market update.
I'm JD Fuller. Together, Dylan and I specialize in selling 50 unit to 200 unit apartment buildings and apartment development land throughout the Puget Sound.
We're about halfway through 2026, and it has not been smooth sailing for the most part of this year.
A highlight of 2025 was our market absorbed nearly 15,000 new units of supply. Now, while absorption is slowing down, so are new apartment deliveries.
As a result of both job losses and historic new deliveries of apartment buildings, rental rates have been pretty flat overall this year across the region. However, just recently, apartment owners are seeing a late spring bump in rental rates and started to slowly push rental rates for the first time this year.
The story of flat rental rates has been one that's been with us for a while. Rents peaked in early 2022, and over the last 4 years, rent growth has been anemic.
And what's significant about this lack of growth is over these last 4 years, overall inflation in the United States has been up 14%. In the same 4-year period, apartment rent inflation is up less than 1.4% cumulatively.
When you adjust rental rates to reflect overall inflation, the rent growth chart looks significantly different.
Now, what would happen if apartment rental rates just came up to meet inflation? Well, apartment rental rates in this market would be up $300 per month. This same story is playing out real time in San Francisco right now.
Looking back just 2 years ago in San Francisco, overall office vacancy topped at nearly 30%, and the market was losing more leasing space than it was absorbing.
Fast forward just 2 years from then, here we are, midpoint of 2026, and they're experiencing historic absorption of office space, leading to that bump in rental rate growth in that market. Now, a recent article in the San Francisco Business Journal stated that 6.4 million square feet of office space was absorbed so far this year. At that rate, it puts San Francisco on pace to cut their vacancy rate in half by the end of this year.
We are just now seeing the grass shoots of growth in apartment rental rates, and we expect much more growth to come. You don't want to be on the wrong side of history for this one.
We're really excited for the second half of 2026. Now is the time to capitalize on these trends just taking root in our market right now. Please reach out to us to value your apartment building or your portfolio. Thank you very much.